Hey, what's up guys? It's day 3 of trading this funded account challenge and just going to be doing the trade breakdown of exactly the trade that I took on Euro USD as well. Unfortunately we took a 2% loss today, but in this trade I'm going to be explaining exactly my thought process behind it. What I could have done a bit better. As even professional traders, there are areas that we can always improve. Red flags that we can start to point out before we even enter the position. But obviously being excited in this challenge and doing it with you guys, there are some mistakes. As we are human, we make mistakes. So let's just get into the video and explain exactly my thought process behind it, right? So coming into Euro USD this morning, it was pretty simple. Ideally we're following flows on what previous day did, and we can clearly see previous day flows were very much bearish, right? We wanted to see the extension back down to this level. What we need to notice is that Euro USD was kind of playing between these two levels for quite some time, and with Tuesday's bearish pressure that came into the market, I expected to see a push down to the downside and maybe break out of this area. As we touched the daily EMA, we kind of retraced, which is perfectly fine, and then we saw that bullish momentum create itself, the bullish wick, and then start to rotate lower. So let's just drop down to the 15-minute here and see exactly what I was looking for. So essentially that was previous day low. We wanted to see an extension at least up until this point here, right? About 50% of this move, okay? But again, what we always need to look at is stats. So stats wasn't a favor. I remember it was 85% red candle day if it broke below Asian range, and then 83% green candle day if it broke above Asian range. So those are very important things that we need to keep a lookout for. So ideally we saw an Asian range breakout, but it was almost a liquidity grab. So dropping down to the 5-minute, we saw a small liquidation happen on Asian range above, but we started to see the rotation to the downside, right? We saw a beautiful extension. Some of our students did get in on the break of the 50 equilibrium and already hit take profits, but I mean, this was too early for me. I wanted to see what price was going to do at 9 o'clock open, and essentially the area that I was looking, remember we have 5 different types of value areas that I look for on a day-to-day basis. So it will be overnight high, overnight low, previous day high, and previous day low. So essentially we got previous day low kind of swept. We wanted to see that continuation back to the downside after pulling back into the 50 equilibrium area. So as basically to give you an idea of what we were looking for is a pullback into this zone, rotation, and then squeeze a little bit further down, and then maybe potentially rotating from there. That was our target at that point. So essentially what we're looking at here is where was price going to pull back to. We see you got beautiful extensions to the top. We had an initial reaction, and not only that, I mean, if we had to take our fib level from the top to the bottom of that move, I mean, we were clearly hitting that 61. So I mean, we had 1, 2, 3, 4 confluences. Why? 50 equilibrium, right? 1 confluences into the value area. Second confluence would be that we did sell off and was holding relatively well below overnight low. Third confluence would be 61, and then fifth confluence would be EMA. So ideally I would be taking this trade any day of the week. It's an A grade idea, and essentially this is ideas that I want to be putting positions on, right? Because I have data and stats to prove that it does work. So we put our first position on the small push down over here, right? Once we got that initial reaction out, and then we started to see a little rotation. I was looking at a 3-minute to get our second size on. We put 0.5% risk on here first, right? And then we put, as price started to rotate, we put our full percent risk on here. And then ideally we were risking a little bit too much. I wanted to take a 1% or 1.5% loss on this idea. I got a bit hasty. As price pulled back into that level, I put my 1.5% risk on here as we got the crack, because we had an initial beautiful reaction on price scaling down and pushing down here nicely. We had a 3-minute break of structure over there, so there was indications of a rotation to the downside, right? But then we had that 5-minute candle that just absolutely rocketed to the top side, kind of broke. What I could have done better in terms of this trade ideas, I think I should have actually minimized my stops, even though I was putting 2% risk on ideally at this point when price was pulling back up to our stop loss. What I could have done better is actually put my stop loss a little bit lower, just above that 5 minutes, essentially, so that I can actually take that 1.5% loss. So ideally, when I saw that crack, we put our original whole 1.5% on. We put our whole 1.5% on here, and then that 0.5% original risk on this trade idea when we got that rotation using the V1 model and then the V2 model. But then obviously with price pushing up, we extended our stops to that point, which left us at a risk of 2% on the trade idea. And then, again, as I said, what I could have done better was simply actually minimizing my stops. And essentially that's what, as traders, we can do on a day-to-day basis, obviously to take less of a loss, as well as pass funded accounts. I was speaking about this on a video that I've done recently that, we all make mistakes here and there. I think ideally the whole trade idea that I built up was not a bad idea at all. I mean, it was A grade in my data and what I've worked with. At 10 to 1, this is a 85% win rate, trade, especially when it's an A grade. So for me to put on 1.5% risk on this idea, especially because we were up 3.5% on the account, it's not a worst thing. I mean, when doing a challenge account, if you are wanting to do it slow and risking 1% to make 1 to 1 or 1 to 2s, that's perfectly fine. Ideally, I don't want to be sitting on a challenge for 2-3 months trying to pass it, as I don't look, A grade ideas don't always come to pass. Not every A grade idea is going to come present itself every day in the markets. So when I do see it, I tend to put 1.5% risk on. But in this case, we put 2% because we were a little bit excited. Now, I'm not saying that you should be putting 2% or 1.5% risk on the first A grade idea that you see in the market. What I'm saying is you need to build up your account to profit margin so that you can take a loss of 2% or ideally 1.5% without dropping back below equity level, which would be the original balance. So ideally, that's kind of what I did. We took a loss there. As I said, what I could have done a bit better was minimizing my stops so that I could have at least taken that 1.5% loss. We did see beautiful reaction out of the level. I mean, even coming back down to the 15, we had a nice reaction out of this point here from the 5-minute EMA rotating lower, and then that 3-minute crack of the previous 3-minute low there. That was ideally what we were looking for, and I was doing this live with my students. So they took a small paper cut. I was still holding just in terms of seeing what price reacted off this level, and then we got quite a massive spike straight after we got to that point. I mean, as you can see, boom, it just went straight up and kind of tagged me out there. So yeah, lesson learned. Not every day is going to be an amazing day. Not every day is going to be a profit that we're going to be hitting. But that's why I'm doing this challenge and being honest with you guys to say where I could have improved, what I'm definitely going to work on for the next trade idea, especially when it comes to this account. Ideally, the next trade, I'm going to be putting 1% on because we still have 1.5% profit. And essentially, we want to see where we can take this account, but we don't want to be sitting on the account for 3-4 months. We want to see movement. If we can get to about 7-8% early stages, then we can look to put a little bit more risk on of 1.5% again. So ideally, I'm going to be chasing or trying to go for another 1 to 3%, risking 1% to make 3% on this next idea. And that will, if we do take a small loss, we'll be left at 0.5% risk, if I could put it like that. So yeah, small L, not a major issue. Again, and I was saying this in my previous funded account video that I did for you guys, is that usually mentally, if you are trading one funded account like this and you spend a bit of cash on it, mentally wise, you are like, I should have re-entered again, or I should have tried and made that profit back, because you're in this mental state of this account is your be all end all. I've luckily have different funded accounts that I'm working with that I'm already waiting on payouts. I got stock investments and crypto investments that are running. So back of my mind, I mean, I'm always in a position, I'm always making a little bit of profit, or at least I'm always in a position to think, I'm not getting that FOMO, etc., etc. As I said, I got different funded accounts that I'm waiting for payouts now too. So taking a 2% loss, yes, is crap for the challenge, but it's not terrible for my mindset. I can come into the market fresh, clean, cool. We took a small L of 2%. Let's get back to the market, look for exactly what we're looking for on a day-to-day basis. As you can see, I'm not taking a trade every single day because I am ideally looking for A grades or A plus setups, because I just want to, put a little bit more risk on once we up back into the profit margin that we're looking for. So if we get back to about 3.5% or 4.5%, then I'll ideally be risking 1.5% again on the next idea, because I want to be not pressing this challenge, but I'm not going to want to sit on it for 2-3 months. So yeah, that's kind of the idea, just to show you where price actually extended. So it's good that we kind of cut our losses a bit early. I mean, price kind of rotated all the way back up from sweeping the low. Now I want to identify those red flags that we can start to look at. One instance is the volume that we had pushing up to our level. Okay, these are very, very important when looking for your trade idea. Obviously, we wanted to see that break and retest and continuations back to the 27 mark ideally, right? But what was important is we didn't have slow correction momentum coming back up into our level. We actually had straight bullish pressure pushing up into that point there, right? So that was the first red flag, which would be the bullish momentum coming up into our level that we wanted to execute. Was very, very had a lot of volume, if I could put it like that. The next one would be obviously previous day low. We broke below it on the 5, but we did not hold it on the 15 or 10. You know, it would have been much better if we saw the 10-minute time frame hold below this level and then start to see the rotation back to the top side. But we saw obviously the 10 and 15 close bullish from sweeping that level, which is not really a good sign. Again, I was excited to take this position. So, you know, we were a bit hasty on it. I think I should have actually maybe put 0.5% risk on, or 1% here, and then holding the position down if it hit stop loss, you know, risking that 1%. But I was eager, as most people do when they're wanting to find positions. And again, as I said, it's an A-grade idea, but there were those few red flags, like 50-minute candle not closing below previous day low. And then, you know, we had the bullish volume pushing up into our level, which was not very, very much good signs in terms of what we were looking at. To give you an idea what DXY was looking at, DXY was also running very nicely at this stage. I mean, we had DXY sweep the low and then started to see that extension to the top side, but DXY also just couldn't hold, you know, that overnight high area, and then we started to see the rotation. That's what we would have liked to see, but then it just broke through and rotated downwards. So USD and DXY is a beautiful correlation, but obviously we didn't get the trade that we were looking for that day. So 2% loss. I'll show the screenshot here of the loss and what the account balance is. And then, yeah, we'll take it forward from there. Hope you guys enjoy the video. Hope you learned something from it in terms of red flags that you can identify, even in A-grade ideas that we are trying to take on a day-to-day basis. Hope you enjoyed. Till the next one, peace out.